Coming up in this show, Arby's going to bring you a sample of our Future Speak show, and he's going to show you analysis of copper. Very interesting setup coming up there. And I'm going to look at the US dollar, euro, and the yen. An important dollar bottom may be forming now. And what does that mean for other markets? And then we're going to bring you the stock market analysis. Matt's going to show you our proprietary indicators and give you a look at the weekly analysis for the next few months. And I'm going to take a look at the shorter term for the SPY for the next few weeks. That bounce into January we're looking for, is this it? Well, that might be. Stay tuned.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a choppy start to the year as investors came into January in a mood to buy. That was post-tax selling, only to run into some negative corporate news and a chorus of Fed talk that was very hawkish. Of course, Monday was closed for the holiday, and Tuesday there was a rally attempt early that was aborted as Tesla fell very sharply, down 13%, on a Q4 miss on deliveries, and Apple was down about 3.5% as they tell suppliers to build less product. Well, that was 9% of the S&P in those heavyweights, and that warns of slowing demand and recession. So the markets struggled there on Tuesday. Wednesday, the ISM report came out. That was weak. It indicates a recession based on those numbers, but the prices paid numbers plunged to the lowest numbers since April of 2020. Investors saw that and pushed the S&Ps up quickly, 52 points. That was despite a Microsoft downgrade that was pretty significant. Leading the upway were the Chinese stocks, as the Chinese government is going to allow Ant to be able to raise about 1.5 billion in cash, and that gave a boost to what is already rebounding stocks from China. Wednesday, those FOMC minutes did come out, and there was very tough talk, and they want unemployment higher, and they want a weaker labor market. Of course, that's not a surprise, but like I said weeks ago, they don't want the financial markets to counteract their efforts. They said that very clearly in that statement, and that simply means that they're watching what happens in the stock market, that it doesn't go up too hard, and they're watching the interest rate markets, that the futures markets don't take interest rates down too far. So if they see that happening, treasuries rallying or stocks moving up too far, there's going to be another Jackson Hole type comment to move the market down. That sets up what could be a lot of wide swings coming up this year. Well, after that news anyway, the S&Ps moved up quickly and then fell, and then moved up again. It was a very choppy day, a range of up 52 to up about 4, finishing up about 30 points on the day as Tesla was able to manage a little bit of a rebound. Thursday, strong ADP numbers and very tough talk from the Fed heads again sent the indexes lower. Fed Esther George came out and said, well, Fed funds are going over 5%. We're going to stay there until sometime in 24. But then Bullard came out with some soft talk, and the market was able to cut its losses. Friday, the big action came as the payroll numbers came out. Now, there were 223,000 jobs created. That was in line or a little bit higher than expected. Unemployment rate fell to 3.5%. That might be regarding the changes in the participation rate, but none of this all that far off from what was expected until investors got a look at average hourly earnings. They were up 0.3% less than expected, and the year over year at 4.6% increase in average hourly earnings. That was versus an expected 5%, and the market looked at that as very positive. Indexes in about 5 seconds, it seemed, panicked to the upside, and we saw the S&P futures up nearly 50, and then they came back to the downside very quickly also. Still, that was seen as positive. And then the ISM came out, and that shows some big slowing. And Fed Bostic was out also. He was saying that, well, all of this doesn't really change our policy, but investors didn't care about that. They are moving the market up here with the S&Ps up around midday, 60 points here. And the question is this that January rebound we're looking for? Well, we've had some false starts here this week, but we'll take a look at that pretty soon. One thing I want to do is I want to backtrack a little bit and think about what happened last year and that the year before with the massive pricing that was in some of these stocks. Well, we've seen Tesla get absolutely cremated here in just these last number of weeks and down well over 70% for the year from this 2021 and 2022 nonsense, which of course Kathy Wood got on in a big way with a major Tesla being a major holding of hers, and of course Kathy Wood, in my opinion, I've said it before, is just a product of the bubble that the Fed and the government created. So she's a bubble investor, and that's why her funds have done so poorly. But I want to look really quickly at something I think is really interesting. Let's take a look at where Tesla is now in relation to other automakers based on valuations. This is a really great look here. This is a company's marketcap.com where you can look at different groups and it shows Tesla here at the top of the heap in market cap. Really interesting. After losing over 70%, their market cap still is 375 billion. Now look at the next largest market cap, which is Toyota, which is less than half of the market cap that Tesla has. And you can see all of these car companies going down here, how much smaller their market cap is. Look at General Motors. General Motors, which produces an exponential number of cars greater than Tesla, has a roughly $50 billion market cap versus $375 billion for Tesla. Is Tesla cheap now, worth a buy? Well, it sure doesn't seem like that's the case. Let's take a look at earnings here, and you can see that Tesla is now sixth on the list in earnings as $12.6 billion in earnings compared to the leader of Toyota. Let's take a look at the revenue numbers. Well, look at this. Tesla actually fell off the list there, and I have to scroll down, and you see Tesla's actually 11th on the list there in revenues, and Volkswagen, which is the largest company revenue-wise, is about 4 times the amount of revenues that Tesla has. How about the PE ratio in here? Well, you can see that this goes by the lowest P ratio, which sometimes you can't really count these because they give you some erroneous numbers, and the have to go all the way looking, where is that Tesla way down over here? Tesla is number 26 at about a 30 PE compared to these other extraordinarily cheap car makers right over there. And how about dividends over here? Let's just take a look at dividends, and you can see that Tesla's dividend, well, you have to go way down here to where zero dividends start because Tesla has no dividend at all. So you can see dividends in here that the dividend ratios, the percent dividends are very high for a lot of these automakers. But of course, Tesla is zero. I thought I would share that. Again, companiesmarketcap.com, just a great site there. Whoop, didn't want to show you that one yet. And I believe that Tesla is going to have a hard time holding upticks in this world that we are right now, as the some changes are going on in the market as far as what investors want to hold. So that's a look at that. Stock market, well, it finished 22 very weak, as there was a lot of tax selling. And the first few days in January, not much better. Maybe Friday is the beginning of something better. What's been going on in there is that towards the end of the year, investors went to safety. They went to stocks that had, I would call them the moat stocks. Other people call them that too, where they're the leaders in their company, in their sectors. They have the top earnings and capitalizations, and they are what they consider to be safety stocks. Those are value stocks. The growth stocks, which got absolutely annihilated last year, continued to be annihilated through the end of the year. I think that's going to change now for a few weeks, as I think that once this deluge of selling in Tesla's over and Apple, they're going to start to look for growth again, looking at it to be cheap. But I don't really think it's cheap. The signs of that, though, are when you look at value stocks, they're starting to get hit pretty hard at the beginning of the year. So it's showing that there's a money rotation. I think that rotation is going to lead the stock market rebound that I think is starting right now. We discussed very extensively in our year-end show, which is now available on YouTube. Part 2 is coming for our members in about a week or a little bit more. That we talked about, we see 23 as a better year than we saw in 22, where we believed it would be a bear market year. Still, we don't see any kind of a runaway bull market, but you can watch that show and the one that's coming up for members to really get that. I think 23 is going to have a lot of chop, and one of those upward phases is due in January. Sometimes at year end, it takes a few days before either side can really get traction. If you look at last year, well, the last 5, 6 days of the year in 21 were up, or they were kind of just easing to the upside, moving up to an all-time high. And then it took till January 5th before the market started to move down, and moved down significantly, and really didn't recover off of those highs, of course, falling to as much as down 24.4% on the S&P 500 for the year at worst levels. Our short-term analysis still says that we're going to have an upward move sometime into late January. That hasn't changed, and that's coming up. You're going to be able to see the intermediate analysis. Matt's going to show you that in our stock index report snapshot, and he'll show you the weekly charts, and that it's likely that the market will try to rebound, and then through February, March, maybe April, have a bigger downside move. If this all plays out as expected, the sum of the evidence in our analysis says a significant selling opportunity is coming again, and this actually may be it. Here, as we look at stocks at midday, the stock market indexes, well, they are narrowly mixed. The NASDAQ is the weakest, thanks to Tesla and Apple and Microsoft. The other indexes are a little bit stronger, so they're mixed and now edging a little bit better to the plus side. The bond market 30s are up about 4 points. The 10-year yields fall 24 basis points. So that was a strong week for the bond market. The gold market following the bond market, not following inversely to the dollar. Gold puts on about $62 to the upside. News report came out that China and Russia are buying lots and lots of gold, and I just think they're positioning themselves to do what they can so that the dollar loses the power that it has over them, and they're going to try to make their currencies more sound, which of course will attract more money into those currencies. Silver down 20 cents on the week, so you could see there's a disparity going on now between gold and silver. And the dollar was up about 9/10 or 8/10 of a percent, and then it turned back down here late on Friday pretty significantly. So just small gains for the week for the dollar right now, and with the dollar up and the gold not being bothered by that, it just shows you that there's some good relative strength now in the gold market. Oil market down like $5.50 or worse, in line with our projections, where we thought it was going to head back down to 70 and lower. It could get down to 65 or to 62. If you want to see all of our analysis on the futures, please do watch Future Speak. Arby's going to give you a little sample of that in just a moment, and you'll be able to see analysis on all of the indexes, weekly and daily, and a total of 24 different contracts in Future Speak, with just amazing analysis that Arby puts on every single Wednesday. So you can get all of that by becoming a level 2, 3, or 4 member. I want you to go to askSlim.com and just look around there. You want to get acquainted? Take advantage of our level 1 special for 3 months. I'll show you that for $45. YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And for any questions you have on our memberships or our huge offerings of education and analysis, write to Matt at askSlim.com. All right, this is a preview of Future Speak. It's a sample video of our 24 different contracts that we look at every single Wednesday, and Ivory does just superb analysis, one of the experts in the world in our style of analysis, that is cycle analysis. And Ivory's going to share with you compelling analysis in copper and some potential setup that is coming.
What we see here in copper is very much in line with what we're seeing with many copper miners as well, and that is a very key basing cycle that is now forming here in copper, with this higher cycle low that is in all likelihood due to form versus this old low. And it indicates that as we get out into that February to March time period, we can look for a likely meaningful impulse higher in copper along with copper miners. So for those who are level 3 and 4 members, keep an eye out for trade ideas coming in this space, as there are some very interesting opportunities that I see in many underlyings. In terms of copper, there is a low that is due 1219 to 123. We are looking for this zone to hold from 364 to 345 or so, and very good odds that we get that impulse higher based on everything that we look at. If we jump over to the daily chart, this is really not giving up a whole lot of ground in a time period where it could be getting hit hard. That is an underlying sign of strength, and that is really what I want to emphasize in this video. On the downside, there are levels coming in from 365 or so to 353. And there is a low that's due 112 to 124. So just look for a modest pullback into that zone. And then once this low forms, we would have that weekly cycle likely turning to the upside along with this daily cycle. And that is that window of time where we can look for impulses higher. So that is some of the evidence here in the copper market.
Super work on that, Arby. Just fantastic. This, I think, is important. All right, we're going to take a quick look here at the dollar, euro, and yen. Some of the evidence says a dollar bottom is forming, and that, of course, is important to a lot of the markets. So let's switch over to the charts. and I will show you exactly what I'm talking about. This is the dollar, and I'm just going to blow it out a little bit further so that you can see the cycle patterns are what we're looking at here. And for those of you that are new to our cycle analysis, we look at the rhythms in the market. Cycle analysis is the energetic movements in the market. We look at multiple time frames and support resistance levels and our proprietary momentum indicators to give us very important information. What I want you to see on this chart, which is going all the way back here to around 2020, you can see the big diamond top that formed in there. That big movement was around the pandemic. And you can see that these dominant cycle and minor cycle was pointing to a low right around here. And the same thing right around here. And the configuration of this is very positive. As you can see, as it rallied most of the time, that set up another big rally to the upside. And this, of course, happens here as the interest rates are moving up here in the US, as the Fed is tightening, and that gives all of this strength here to the dollar. I'm going to take a little closer look here for you to see. And this is important, as there is an important bottoming going on right here, not only on this dominant cycle, not only on this minor cycle, but also the timing on the monthly cycle also, which I'm not going to show you. That'll be in the big picture analysis, part 2 that I'm going to be doing in the next week or two. And then you'll get an idea of that monthly chart. But you could see this upward turn right over here. Now, that doesn't look all that significant yet. The momentum here, as you see in a reversal scout, is still pointing to the downside. So this has work to do. It's come into this support zone. There's dominant supports here, and the monthly support, that major 50 right there, is fairly close. And you can see that it is trying to turn up here, as now it appears that the Fed will stay tight all the way into 2024, according to a lot of the Fed speak that we hear out there. So we're looking for this rally to come out here into sometime April of this year. And when I look at the euro currency, I'll show you why I think that the dollar is going to rally out into April. So this is about 107 3/4. The top of that right over there is around 110.5. That would be our target zone between now and April. Of course, if the dollar is moving up, that probably means that it's going to be a rough time for the metals. They might have some pullbacks in there. This is not looking at a new high in the dollar. This is looking at a positive phase and a rally in there. And that probably means that interest rates are still going to be moving to the upside. We actually think those are going to go back over 4% on the futures on the 10 years. And that might, of course, be a problem for the stock market also. As the dollar strengthens in here. Look, you can see that we're not looking for a huge amount of strength, but a period out into April. Let's look at the daily chart. This is just phenomenal. When I look at that, let me get this a little closer for you, but I want you to see the cyclical patterns that are in here. There's a dominant and minor cycles in there, and cycles sometimes shift, and you can see in here what was the original cycle, and then this shift that went on right over here. When you get into the period where the minor and the dominant cycles are coming down, we put in these yellow areas here because these are cautionary periods of risk right in here and right in here and right in here. Also, when you break the key low, as this one did, it sets you up for a decline. So this was a little bit longer than we had expected, but that's in relation to the topping that was going on in the euro. So what's very important to look at is the relationship between the euro and the yen. And I'm going to go back to the weekly here so that you can see that the euro and the yen and the weightings that are in there. Where are those? Right there, right over there. Okay, so euro is 57.6%, Japanese yen is 13.6%. So you get about 70% of the dollar index just by looking at those two currencies and how they relate to the dollar. So with this weekly cycle turning up right over there, and what looks like the end of the daily cycle right over here in this upward turn, that is giving an indication that there is a bottom forming right now. And I have a note in here that you can see that the US dollar JPY trough is due the first or second week of January. In other words, the low in the US dollar versus the Japanese yen is due to come at the same time. And I'll show you that in just a moment. Let's first head over back to the weekly chart right here. here, and I'm going to show you the euro currency. So that's EUR versus the US dollar. And we'll take a look here, and you can see, look at that beautiful head and shoulders top that formed in there, and the measurement was right over here. Here was an important breakdown. It fell right down into this minor cycle bottom there. There was a shift from the dominant, and then this upward turn in momentum, and you saw the euro currency moving up. But now it is beginning to move down and peak. This only points to a low sometime in late January and then another attempted rally. This indicates that for a brief period of time that the euro is saying that the dollar will be range bound for a while before it then begins to pick up. And then this period right over here is where it declines into April, and that's where I showed you the dollar is likely to rally into April. Remember, this is 57% of the DXY, and that's why we look at the inverse correlations in here to give us an indication. So with this peak that went on right over here, this suggests a decline into late January, or a rally in the dollar into late January. When I look at the daily chart, there is actually a breakdown right over here. These were beautiful, strong cycles that you can see right in there. Look at the low here, perfect. The low here, perfect. The low here, perfect. This was a little bit long, but the inverted head and shoulders got you right up to the measurement right there. Beautiful. Pulled down right over here in this declining phase. Positive cycle. Gets you right down to the buy zone, or the slim ribbon, which was positive right over here, and then begins to give you these signals. This is the slim ribbon PO on the bottom. These are upward momentum reversal signals right in there, and it's beginning to weaken right in here, as you can see, even though it's still giving you those signals, and it's trading in a range. Here was the lows right over here, and now it's broken that. So that says that there's likely a decline coming. Where? Towards the 3rd to 4th week of January. So that lines up with the weekly chart in the euro, and that says to you that we're likely to see this dollar rally we're in right now going up into that period of into January. Then there'll probably be a rally right over here in the euro, which will bring the dollar down again, and then that decline out into April that we're looking for in the euro, which will continue to give the dollar a lift. This breakdown right over here says to us there's trouble. Once the slim ribbon PO goes red, it will be giving us warnings that it will be moving down. You can see as it was doing right through here in these signals, here again, and that gives you gives sense when you're in these downtrends and negative. This is when it was in the uptrend and positive. This looks like it's about to give way. You can see the slim ribbon collapsing on itself right there, and that will neutralize it and then probably turn negative. That is bullish for the dollar. And again, if that's the case, it's probably going to weigh on the metals. It's probably going to mean that interest rates are going to be going up, and it probably means that the stock market's going to be having trouble. Let's look at the US dollar slash JPY. It's the reciprocal of what we're looking at right now. So now when it goes up, it means the dollar is strong and the yen is weak on this chart. And you can see where the bottom was due right over here. These two lines are showing you about where the range of the trough would be, give or minus a few days, and that made the bottom. And here there was a slight shift to the right that we put in there, but you could see the alignments right here and here and here and here. Beautiful cyclic action right there. Here's where you broke down and it turned negative. This is called a left-hand translation, where it breaks down early and turns negative, and then you had 1 and 2 cycles to the downside. That means that these are resistance areas right over here. It's likely to stall somewhere here around 134.70 to about 136.20, and then come down, but not make a lower low and then begin to move up again. What does that look like on the weekly chart? Well, right over here, you could see it looks like the dollar bottoming. And we have the projections that could even be higher if the dollar gets really strong in here or the yen gets very weak. Also, the fact that this pattern is showing what we call a negative configuration. You see where this low was pointing right here, and then this made a lower low. It means that this rally here for the dollar yen, which looks like it's going to be very strong, potentially out over here into the March period, will probably stop in these resistance areas, and this might actually be sell areas right there, but still we're looking at a period of probably at least 3 months on the upside for the US dollar JPY. So again, that's where it's turning up on the weekly chart. This is where it's beginning to turn up on the daily chart. Look at the slim ribbon PO on the bottom, how that was telling you and warning you of downside resumptions. And now we're waiting for this to turn first blue when it neutralizes, and then green, and we think that will happen. Look at the slim ribbon, how negative it was and configured this way on the downside. That's why it's so red like this, but we think it is about to turn up and make that bottom. So what is the sum of the evidence in here when we look at this? Well, we see that the dollar yen is telling us that the dollar is bottoming and it has probably a few months to rally. The dollar euro is telling us that the euro has peaked and actually has a breakdown in there on the daily chart, and that it's likely to trade a range, come down into late January, try to rally again, and then come down into April. All of that is suggestive of a stronger dollar. And when you look at the sum of the evidence, that says to us that it is pretty likely that we're going to see the metals try to rally, but as they are right now, but begin to falter and struggle. That probably will give us a buying opportunity. And also that the stock market, even though we're looking for a rally up into January here, probably won't be able to hold rallies very well. And that goes, that sets up for the decline into March that we're looking for, probably peaking somewhere at time late January. Also, all of that is just suggestive that the conditions for the market, the stock market especially, are not going to be great, and the conditions for the dollar look like they're going to be good. Well, for probably at least 3 months. That's a look at the dollar and the euro and the yen, and the sum of the evidence and what it probably means for the other markets. All right, stock market analysis. That's coming. But first, there's an opportunity to see me live, and it's free. Here's what you have to do. Coming up January 19th, 2023 at 10 a.m. Eastern Time, I'm going to be presenting at the Wealth 365 Summit. This is a great summit, and there's 6 days starting on the 16th, and that's Monday, where you'll be able to see 50 or 60 of the best presenters, authors, traders, analysts out there in the financial world. So you'll be able to see me January 19th, 10 a.m. I'm going to present on short-term trading, how to ride the big impulses for greater profits, plus 20 reasons why day traders miss their profit potential. You're going to find it fascinating. And we're going to give away a prize at the end, a cycle analysis workshop worth almost $1,300. If you want to sign up, please do. If you're watching this on YouTube or Twitter, then the link for the sign up is right there on those posts. If not, please write to our team at askSlim.com, and tell them that you want the link to the Wealth 365 presentation, and then Brian will send that to you, and you'll be able to sign up there. And be able to see just this great overall presentation that I give, plus all of these other presenters that are there. So please do sign up for that through YouTube, Twitter, on our posts, or write team at askSlim.com for that special free link for the Wealth 365 Summit. All right, stock market analysis. So this is going to be kind of complex because Matt is going to share the SIR daily snapshot, give you an idea of what's in there. The current weekly analysis and our special indicators are in this presentation right now. So you're going to watch this, and then after I do my piece, I'll show you how to sign up for this daily snapshot for just $45 for 3 months. This is amazing. Matt's going to bring you some great work right over here. Matt, show that to them.
Hello, fellow traders and technical analysis enthusiasts. This is Matt with askSlim. In this brief segment, I'm going to provide an overview of an essential technical analysis service that is available in our Level 1 membership, the askSlim Stock Index Report, or for short, we call it the SIR Daily Snapshot. It is published each trading session a few hours after the close. The SIR Daily Snapshot is a comprehensive technical review of the S&P 500, NASDAQ 100, and Russell 2000. It is designed for active short-term and intermediate swing traders who look to use the major indexes as a proxy for their trade planning and are looking for ongoing technical insights regarding time, price, and direction. Our primary goal of the Daily Snapshot is to help our members make sense of the market conditions by providing education on the askSlim technical methodology, which combines cycle analysis, which we use to measure the money flow patterns or market heartbeat to indicate the most likely times in the market is going to rise, peak, fall, and make a low. We combine that with momentum studies to help identify the primary directional bias and swing high, swing low techniques for identifying key price levels and projections. All of that data helps us to form a sum of the evidence to gauge whether the indexes are likely to make new highs or new lows. Cycle analysis helps to give meaning to the market messages and the chart patterns. What is key to look for are the peaks and troughs, the highs and lows made during the cycles. That information helps to define whether a pattern structure is positive or negative. If we can define the trend, then we are likely to have the odds in our favor when projecting whether a pattern has a negative downside bias where there is likely to be lower lows or failed rally attempts, or a positive upside bias where there's likely to be higher highs or strong rally attempts off key supports. So what are the weekly chart conditions for the S&P 500? Well, if we look at this chart, the SPX has experienced several cycle breakdowns and printed a series of lower highs and lower lows. You can see that starting here back in October of 2021, where the S&P established a cycle low. Then we rallied and made a cycle peak, which has turned out to be a major top. Then we had a cycle breakdown, our first key indication of this major top. In that next rising phase, we failed to make a new higher high and then experienced in that declining phase another cycle breakdown, continuing to indicate that we had a negative cycle structure. When we made the next lower low, and in the next rising phase or rally attempt, you can see that it failed to make a new higher high. And then when the cycle peaked and we went into the next declining phase, again, we had a cycle breakdown, continuing this pattern of a negative condition, which brings us to where we are now, where there is a higher probability that the current price action is going to fail in these minor weekly resistance zones, and that we roll over and have a likely retest because of the negative overall cycle structure, a retest of this prior cycle low. If we were to see the SPX get above the minor 78.6 here around 40.25 or so, then we would have to reevaluate this overall negative condition. Okay, let's take a look at our most recent daily snapshot that we published yesterday and see how we bring this information from the charts together. I'm going to click on yesterday's daily snapshot, which is available to all of our levels 1 through 4 members. When you open up a daily snapshot, you will notice that each report has 5 sections. The first section, which we call our technical summaries, extrapolate the current technical conditions reflecting in the charts, which includes directional bias, each aspect of our daily and weekly cycle analysis, key upside and downside price levels, and where the analysis would likely need to be reevaluated, and if there's any special market sentiment notes to pass along, as we did in this report, where on 12/28/22, the total put call ratio spiked to the highest level in more than 20 years. So we do this technical summary for each one of the indexes, the S&P, the NASDAQ, and the Russell 2000. The next section of the daily snapshot are the askSlim charts. So with the askSlim charts, you're going to have access to our work that we do on the 2-hour chart, the daily chart, as well as the weekly chart. And this information in terms of the multiple time frame chart analysis, the actual charts that we work on, we take screenshots of and we upload into the daily snapshot on a daily basis. And those are available for, again, the S&P 500, the NASDAQ, and the Russell 2000. In the next section, we apply our analysis for assisting with thinking through the trade planning process for determining upside and downside price projections at multiple time frames, including short-term, intermediate, and longer term. So as you can see here, here's an example of short-term upside price projections and downside price projections, as well as the technical evidence that is relevant to that specific time frame. And we do a review of those price projections on a daily basis and make updates as necessary. And that is done for, again, the S&P, the NASDAQ, and the Russell. Okay, the final two sections here include the technical evidence comparison section, where at a glance you're able to see the overall momentum and trend conditions for the S&P 500, NASDAQ, and Russell. So at a glance, you're able to see how those conditions are comparing across the various time frames and relative to each one of the indexes. This is the 2-hour area chart here for short-term traders. You can see here where the S&P 500, where we close today negative, the NASDAQ negative, and the Russell, relatively speaking, is in a little better shape from a momentum perspective, closing in a neutral condition at this time. All of this information, again, is prepared and uploaded into the daily snapshot on a daily basis. The final section in the report is the cycle analysis table. Cycle analysis includes, in the table here, we have our daily cycle structure, whether it's positive or negative, our daily cycle phase, the idealized timing, so whether we are in a rising phase, a peaking phase, a declining phase, or in that bottoming process period of risk timing. And then also the projected date and range for the next daily dominant cycle low, as well as the projected date and range for the weekly cycle low, the weekly cycle phasing, as well as the weekly cycle structure. Okay, finally, I wanted to mention that you can connect with us regarding the daily snapshot in our Discord server, which is exclusive to our premium askSlim members. And you can ask questions regarding the daily snapshot in here. So we want to make sure that we always provide the highest level of support for our members. All right, that's all I have for this special segment. Back to you, Slim.
All right, this is my analysis on the stock market. Short term, we're going to look at the SPY 1 to 3 week view. Now, what we've been looking for is a rebound to come in January. It's kind of looking like that is starting right now. It's tried a couple of times already to open the week on Tuesday. And then another time during the middle of the week and here on Friday, and the rallies have not been able to hold up. But now maybe this will be the time that the market can hold up, and I'll give you an idea of what I am looking at. So this is a look at the SPY. Now, for those of you that are brand new to our analysis or are just tuning in like on YouTube because all you wanted to see was the stock market analysis, well, make sure that you go back and you see what Matt said because he's going to he will show you the weekly and a bunch of our indicators, and you'll be able to see the bigger picture there. But what I'm going to show you is the daily, and we do cycle analysis. And on the bottom here are cycle brackets. That's how we see the energetic movements in the market. In this case, there is a dominant cycle that is right in here, and it shows you the harmonics is 27 days on the dominant and 9 days on a minor that shows up. In the minor thirds, you can see a minor third, a minor third, a minor third right over here to make up 3 pieces there. When you get into the area of the nesting of cycles, that's when the biggest declines come. You can see that here and here. And when only a small one comes and it comes very late, it tells you the market is bullish. When it peaks very early and breaks the significant low, it tells you the market is bearish. Plus, we have in here our slim ribbon, which when it's configured positively, all three of the averages moving up, it's a positive condition. And when it's configured negatively, it's a negative condition. And right now, it's still configured negatively here. And you could see that reflected right there in the slim ribbon PO. When the resumption signals come right over here, it's telling you that it's likely momentum will click to the back to the upside or click back to the downside, as you see right over here. So right now momentum is still negative and the slim ribbon is still negative. So this says that work needs to be done. Matt showed you that when he shared with you the conditions of the market when he looked in the SIR snapshot. So if you didn't see that, go back and look at that section in this show. I think it's really important analysis. So where are we right now? Let's just get a little closer look right here. And we are in a period that should be bringing a rally. We are in what would be considered a rising phase. So when the dominant turns up and you get the low in between the two low, this shows you the range of where the low should be, then that generally tells you that it's going to accelerate on the upside. You see what happened right over here at that time, it accelerated on the upside. You see what happened here, it accelerated on the upside. It's having trouble getting traction right in here, and it's giving you this rectangle shape that you see right there. It could go, the highest probability is that it will break out above here and then move up into these resistance areas, as you can see our projections. There is a possibility that it will just stay in this range right over here, break underneath these levels here, and then head lower. This would be a surprise to me based on what I see in the sum of the evidence analysis and the other the indicators that we see in the charts in the longer term. I would expect this would be able to move up here. These resistance numbers are 388.50 in the SPY, 392.80, 397. So we had talked about 397 as the likely upside move and thought that this area here around 403 was a low probability. We still think that. Probably this upside move gets up here to that 393, 397 area and then rolls back over and then tries to move up again. Now, our projections for the trough in implied volatilities are out towards the 3rd to 4th week of January. That's why we're projecting this as we are and then moving back down. This decline right over here could hold above these lows if it comes this way or break below them. If it broke below them, we know that the decline we're looking into February and March had begun. If it holds above, then it would be the decline following this next rally that would be moving into that period of risk in February and March. So right now, looking at only the next 1 to 3 weeks, the highest probability is we break out above that level, which would be 837.40. And then accelerate to the upside and get into this area 392 to 397. 393 to 397 with an outside chance over here at 403. Key number getting over the rectangle of 387.50, getting below this low right over here, which was 374.77. If that happens, the picture is a lot worse than what we think it is right now. Some of the evidence suggests the highest probability is that it moves to the upside into the 3rd or 4th week of January. Add this to the great analysis that Matt just showed you, looking at some bigger picture stuff, and you see that the market has work to do right now. It is still in a negative condition, and it's going to have to change that before it can get any real traction to the upside right now. That is a look at the stock market. I hope you found that incredibly valuable. A little earlier, when Matt showed you the amazing information that's in the stock index report, You could have that actually. He told you it's for all of our members level 1 through level 4. You get not only our daily stock index report, for longer term holders, you'll get our momentum tracker with all of our built in algorithms with over 1,000 symbols for 3-month holding and longer. You'll also get our SPR Spider ETF we review, which is weekly, our new trader workbench. You'll get the Market Week show and the archive with all of our review, and you can review all of our analysis and our analytical style. You're going to get our askSlim live replays, and you'll be invited to some of those askSlim live events. Just unbelievable information in there, and Q&A with our members, and other special member videos for all of your short-term swing trade planning, and much, much more. There's new added right now to that special member video list. $45 for 3 months. How can you not do this if you're not an askSlim premium member already? This is absolutely great, and especially for short-term traders. You're going to be blown away by the live charts that you see in our SIR live, and you're going to think it's, wow, that is fantastic. So just absolutely great stuff for people to come on, especially for short-term traders. Please do. I want you to go to askSlim and just get acquainted. Even if you just sign up for a free membership, so you get some notification for us, or try that level 1 on YouTube. Subscribe to our channel, click that notification bell, and like this video. Give it a thumbs up. Watch our member videos in the playlists and past shows. On Twitter, follow us at askSlim. And any questions that you have about anything that we've presented in here, our memberships, our style of analysis, any question you might have, please write to Matt at askSlim.com. That's it. I want you to be so unbelievably careful, because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show.